Welcome back to the Daily Earnings Reports podcast, everybody. Don't forget to like and subscribe to the channel wherever you are listening to us from. Today, we're going to be diving deep into Constellation Brands' third quarter performance for fiscal year 2025. Now, they are the powerhouse.
Big names.
Behind some of your favorite drinks, from Corona and Modelo to Robert Mondavi wines. To get the full story, we're cracking open their Form 10Q, the quarterly report they filed with the SEC.
Yeah, and it's interesting because at first glance, their consolidated net sales, they seem pretty stable year over year.
Oh, yeah.
But when you peek under the hood a little bit, there's a lot of movement within their different segments.
Okay.
A hefty goodwill impairment charge.
Yeah, oh, yeah.
And their evolving relationship with Canopy Growth, the cannabis company, are definitely key factors to consider here.
Okay, so let's break it down, starting with that goodwill impairment charge. The 10Q reports a $2.25 billion charge, specifically tied to their wine and spirits business. Now, that's a significant signal, wouldn't you say?
Absolutely. It suggests that Constellation Brands, they're anticipating some future challenges in their wine and spirits segment. Essentially, goodwill represents the premium paid for an asset, above its book value, often reflecting brand reputation, customer relationships. So this charge implies they've reassessed the value of that asset, and they believe it's worth less than they initially thought. It raises questions about their long-term strategy in this market.
So it's not just about the sales figures, it's about their confidence in these brands moving forward.
Yeah.
And speaking of changing dynamics, what's the story with their stake in Canopy Growth?
Well, Constellation Brands, they've transitioned from a direct equity stake in Canopy Growth to what are called exchangeable shares. Now, this move removes them from the obligation of directly reporting Canopy's financial performance on their income statements. It simplifies their reporting, but it also hints at a shift towards a less involved role in their cannabis venture.
Interesting. It seems they're streamlining their focus. Now, let's dive into the performance of each segment. Beer drinkers are probably wondering if Corona is still holding its crown.
Well, the beer segment is definitely a bright spot for Constellation Brands. They reported a 3% increase in net sales, driven by both volume growth and surprisingly favorable pricing in some markets.
Really?
Yeah, this demonstrates the strength of their brands, even in an environment where consumers are increasingly price conscious.
Okay, so the report also mentions that shipment volume growth was actually impacted by subdued consumer spending and prolonged value-seeking behavior. That seems a bit contradictory.
Yeah, it's a nuanced situation. While consumers still crave those Coronas and Modelos, they're becoming more selective about their purchases. They might be opting for cheaper alternatives within the beer category or simply buying less overall.
Right.
It reflects a broader trend we're seeing across various consumer goods as inflation persists.
So even a powerhouse like Constellation Brands isn't completely immune to the pressures affecting consumer behavior. Now let's shift our attention to the wine and spirits segment, which, as we know from that goodwill impairment charge, is facing a tougher climate. What insights does the 10Q offer about their performance?
Well, net sales for wine and spirits, they took a significant hit, declining by 14% year over year. The report attributes this decline primarily to decreased shipment volume in their U.S. wholesale market. This suggests a decline in demand for their mainstream and premium wine brands.
Wow.
A trend that extends beyond just Constellation Brands and reflects broader shifts in consumer preferences within the wine industry.
So it's not just about internal factors, it's about adapting to a changing market landscape. What else is contributing to this decline?
Well, the report highlights the impact of retailer inventory destocking. This means retailers, anticipating slower sales, are ordering less wine from suppliers like Constellation Brands. It creates a ripple effect through the supply chain, further amplifying the decline in shipment volumes.
A double whammy of a shrinking market and cautious retailers. Lastly, let's touch on corporate operations and other. What falls into this category and how did they fare?
So this segment covers the operational costs of running Constellation Brands as a whole, things like, corporate development, finance, legal, HR, IT, essentially the behind-the-scenes functions. The 10Q indicates that operating losses for this segment remain relatively stable year over year, with no major fluctuations to report.
Good to know. Now let's pop the hood on their financials and see how these trends translate to their bottom line. What are some key takeaways from the 10Q?
Okay, well, despite the struggles in wine and spirits, Constellation Brands, they managed to maintain a relatively flat operating income overall.
Really?
This is partly due to the strong performance of their beer segment and also to reduced losses from their commodity derivative contracts.
Derivative contract.
Yeah. So essentially, these contracts help Constellation Brands hedge against price volatility in the commodities they rely on,
Right.
like aluminum for cans, corn for beer.
Mm-hmm.
Sometimes these hedges work in their favor, sometimes they don't. This quarter, they effectively mitigated potential losses, contributing to their stable operating income.
Okay, so they're strategically managing risk to protect themselves from market fluctuations. What about their net income and earnings per share? Those are the figures investors really pay attention to.
Well, both net income attributable to Constellation Brands and diluted net income per common share saw substantial increases, 21% and 23% respectively.
Wow.
This is largely attributed to a lower provision for income taxes, which we can, delve into later. On the surface, this is positive news for shareholders.
It appears their strategic maneuvers and the beer segment's strength are helping them maintain a solid position. Beyond the numbers, the 10Q includes a management discussion and analysis section,
Right.
offering a glimpse into their strategic thinking. What stood out to you in their commentary?
I found their candid acknowledgement of the current macroeconomic challenges to be insightful. They openly address the impacts of inflation, global supply chain disruptions, and even geopolitical events on their business. It demonstrates a realistic understanding of the current economic landscape.
So they're not shying away from the headwinds. What steps are they taking to navigate these turbulent waters?
Well, they're not just weathering the storm, they're proactively implementing cost-saving initiatives across their operations.
Right.
They're also focusing on efficient inventory management, to avoid overstocking in a volatile market, and continuing their hedging programs to manage commodity price risks.
It sounds like a multi-pronged approach to mitigate risk, but they're also a company with a long-term vision. What did their discussion reveal about their strategic priorities beyond just tackling the current challenges?
Well, they emphasize their commitment to several key pillars: strong brands, innovation, disciplined capital deployment, and ESG initiatives. They're investing in brand building and new product development to stay relevant to evolving consumer preferences. They're strategically acquiring and divesting assets to optimize their portfolio. And they're increasingly focused on sustainability and social responsibility. It's a holistic approach to building a resilient and future-proof business.
It seems they're focused on not just surviving, but thriving in the long term.
Yeah.
And that brings us to their financial health and stability. The 10Q provides insights into their liquidity and capital resources. What are the key takeaways from that section?
One of their biggest strengths is their ability to generate strong cash flow from their operating activities, the lifeblood of any business.
Right.
They're also leveraging innovative financial tools like a voluntary supply chain finance program to manage their working capital more efficiently.
Can you elaborate on that supply chain finance program? It sounds intriguing.
Sure. So imagine you're one of their suppliers, right? And they owe you money for a shipment of glass bottles for their beer. Instead of waiting for Constellation Brands to pay you directly, you can opt to receive payment earlier through this program.
Okay.
It's facilitated by a financial institution. This helps suppliers manage their cash flow and potentially benefits Constellation Brands by strengthening their supplier relationships.
A smart way to optimize their financial ecosystem. Now, no discussion of financial health is complete without examining their debt. What does the 10Q reveal about Constellation Brands' debt profile?
Well, they primarily rely on fixed-rate senior unsecured notes, a common financing method for large corporations.
Right.
They also have a commercial paper program,
Okay.
a means of short-term borrowing to cover temporary cash flow needs. The report details the covenants and restrictions associated with their debt agreements, which investors scrutinize carefully.
It seems like a standard debt structure for a company of the size. But what about their approach to returning value to shareholders? Do they pay dividends? Do they buy back stock?
They do both. Constellation Brands has a history of paying dividends, and they recently declared a quarterly cash dividend.
Okay.
They also have an active share repurchase program, a way to return value to shareholders by reducing the number of shares outstanding.
Right.
These actions signal their commitment to sharing their success with investors.
A good sign for those invested in their performance. However, no investment is without risk.
Right.
The 10Q highlights some potential risk factors. What are some key risks they flag for investors to consider?
Well, they emphasize the critical importance of their trademarks and proprietary rights as their brands are their most valuable assets.
Mm.
Failure to protect their intellectual property could pose a significant threat.
Mm.
They also address typical risks like supply chain disruptions, the unpredictable macroeconomic environment, and intense competition within the beverage alcohol industry.
So a mix of internal and external factors that investors need to weigh. Let's zoom out and synthesize the insights we've gleaned from their performance this quarter. What were the most prominent themes or trends that emerged for you?
Well, Constellation Brands presents a fascinating contrast right now. Their booming beer business is riding the wave of premiumization trends and strong consumer demand.
Yeah.
On the other hand, their wine and spirits segment is facing headwinds, prompting them to reevaluate the value of those brands and take that substantial goodwill impairment charge.
Right.
It's a dynamic situation that will be interesting to observe in the coming quarters.
It's a delicate balancing act between two distinct portfolios with their own sets of challenges and opportunities. For our listeners trying to understand Constellation Brands' performance and its implications for the broader beverage alcohol industry, what key takeaways should they be considering?
Well, the big question is, how sustainable are these premiumization trends in the beer market? Can Constellation Brands continue to raise prices and ride this wave? Or will consumers eventually start to prioritize value over premium offerings? And what about the wine market? Will it rebound?
Right.
Or is Constellation Brands' cautious approach to those brands justified? These questions will shape not only Constellation Brands' future, but also the broader landscape of the beverage alcohol industry.
Thought-provoking questions indeed. So for our listeners, I encourage you to keep an eye on these trends, do your own research, and maybe even enjoy a Corona or a glass of Robert Mondavi while pondering Constellation Brands' trajectory. We'll be back soon with more in-depth analysis of earnings reports.
There's a lot to unpack and analyze.
Absolutely.
And I'm eager to delve deeper into the nuances of their financial strategies and the implications of their choices.
Absolutely. Stay tuned, folks. We'll be back soon for part 2 of our deep dive into Constellation Brands.
Yeah, it's not just a matter of, premium versus mainstream. The rise of alternative beverages like hard seltzers and ready-to-drink cocktails and even non-alcoholic options.
Oh, yeah.
It adds another layer of complexity to the whole thing.
Right.
These contenders are all vying for a share of the consumer's wallet, potentially impacting, both beer and wine sales.
It's a competitive landscape out there. Constellation Brands' strategic emphasis on strong brands and innovation will be crucial for staying ahead of these evolving consumer trends. Speaking of navigation, the 10Q also sheds light on their debt situation. We discussed their reliance on fixed-rate senior unsecured notes, but I also have this commercial paper program that sounds almost like a corporate credit card.
Oh, yeah, that's a fair analogy. Commercial paper is essentially short-term debt that companies use to kind of bridge temporary cash flow gaps.
Right.
It's a revolving line of credit they can tap into when needed. The report mentions their commercial paper program is backed by unused commitments under their revolving credit facility, giving them a safety net if they need quick access to, additional cash.
So they're managing their short-term liquidity strategically. The report also mentions covenants and restrictions associated with their debt agreements.
Right.
What should our listeners be aware of in that regard?
Well, covenants are essentially promises a company makes to its lenders to maintain financial health and ensure their ability to repay debts. These can include maintaining certain financial ratios, limiting additional debt, or restricting certain types of transactions. These covenants act as safeguards for the lender's interests.
Investors should always pay attention to the details of these debt agreements to understand any potential constraints on a company's financial flexibility. Moving on to capital allocation, how is Constellation Brands utilizing their cash? Are they investing wisely to grow the business?
Oh, they're certainly not hoarding cash.
Okay.
The report highlights significant capital expenditures, particularly in their beer segment. They've allocated a substantial $1 billion for what they call their Mexico beer projects.
Billion, wow.
Focused on expanding and optimizing their brewery operations in Mexico.
Makes sense, considering their Mexican beers are their star performers. What about returning value to shareholders? We touched on their share repurchase program earlier. How active have they been in buying back stock?
They've been quite active. The report provides, details on the number of shares repurchased recently and the prices. This information helps investors gauge Constellation Brands' commitment to returning value through buybacks.
Right.
It's worth noting that buybacks can be a bit controversial.
Oh, okay.
Some argue that companies should prioritize reinvesting profits for, long-term growth instead of artificially inflating earnings per share through buybacks.
It's a balancing act between rewarding shareholders in the present and investing for future growth. Let's not forget about the S&G and ESG.
Yeah.
Constellation Brands' management discussion emphasizes their commitment to sustainability and social responsibility.
Right.
Can you elaborate on their initiatives in this area?
Sure. They're taking a multifaceted approach, focusing on improving water availability and resilience in the communities where they operate.
Yeah.
They're also working to reduce their greenhouse gas emissions through, energy conservation and renewable energy initiatives. Additionally, they're implementing programs to minimize waste and enhance the recyclability of their packaging.
It's encouraging to see a comprehensive approach to ESG, addressing both environmental and social aspects.
Yeah.
But how do these initiatives translate into tangible business value?
Well, while the report doesn't delve into specific metrics or ROI calculations for their ESG initiatives, it's important to recognize the growing demand from investors and consumers for companies to prioritize these issues. It's no longer solely about profit maximization.
Right.
It's about building a sustainable and responsible business for the long haul. ESG factors are increasingly becoming a key differentiator in the marketplace.
Absolutely. It's a shift in perspective towards a more holistic view of business success. The 10Q also touches upon potential risks related to employee labor activities. What should our listeners be aware of on that front?
It serves as a reminder that a company's success ultimately hinges on its workforce. Labor relations can significantly impact financial performance, whether through, potential strikes, wage pressures, or even a decline in employee morale.
It underscores the interconnectedness of a company's operations. Happy employees often contribute to happy customers and ultimately happy shareholders. As we wrap up part 2 of our deep dive into Constellation Brands 10Q, what key question should our listeners ponder?
The central question is, can Constellation Brands successfully navigate the contrasting fortunes of their beer and wine and spirits segments? Can they leverage their strengths in beer to counterbalance the challenges in wine, or will they need to make more drastic adjustments to their portfolio? Only time will tell.
It's a classic tale of adaptation and strategic decision-making. And that's what makes analyzing these earnings reports so fascinating. We get a real-time insight into how companies respond to the ever-changing market dynamics.
Absolutely.
We encourage our listeners to stay tuned for Constellation Brands' next earnings report. We'll be here to decipher it with you.
Indeed. The next report will likely reveal crucial information about their strategic direction and their ability to adapt to the evolving market landscape.
We'll be back soon with part 3 of our deep dive, exploring further insights from Constellation Brands 10Q. Stay tuned.
Yeah, it's a complex puzzle for them to solve. Speaking of strategic moves, the 10Q also reveals some interesting details about Constellation Brands' recent divestitures and acquisitions. They've been actively reshaping their portfolio.
Okay, let's unpack that.
Yeah.
What assets have they been shedding and acquiring? It sounds like they're playing a game of corporate chess.
Well, they recently completed the sale of their SVDK vodka brand, which suggests a strategic shift, away from mainstream spirits towards a greater focus on higher-end wine and spirits. In terms of acquisitions, they acquired the Meiomi wine brand a while back, and it's been performing well for them.
Right.
They've also made some smaller acquisitions in the craft spirit space, like High West Distillery, known for its premium whiskeys.
It seems they're aiming to elevate their wine and spirits portfolio, moving away from the mainstream brands that are facing pressure.
Yeah.
It's a classic premiumization strategy, but in a more challenging market environment.
Precisely. The question is, will this strategy be enough to revitalize their wine and spirits segment? Right.
Or will more drastic measures be necessary?
Yeah.
It's a development investors will be watching closely. Now, no earnings report analysis is complete without a discussion of taxes.
Right.
The 10Q delves into Constellation Brands' effective tax rate and the various factors influencing it.
Taxes, the inevitable reality of business. But why should our listeners pay attention to a company's effective tax rate? Isn't that just a kind of dry accounting detail?
Well, while it might seem like a technicality, a company's effective tax rate can actually reveal quite a bit about their financial strategies and overall profitability. Constellation Brands mentions that their effective tax rate this quarter was affected by the sale of their A vodka brand
Right.
and the resolution of some previous tax examinations.
Okay.
These one-time events can cause fluctuations in the tax rate,
Yeah.
making year-over-year comparisons more complex. So investors should look beyond the headline number and understand the underlying factors driving those changes in the tax rate. We've covered a lot of ground in this deep dive, from the performance of their beer and wine segments to their debt management, capital allocation strategies, ESG initiatives, and even their tax situation. But before we wrap up, I want to circle back to that significant goodwill impairment charge related to wine and spirits.
Yeah.
It clearly signals that Constellation Brands anticipates challenges ahead for those brands.
Right.
But what does it tell us about their long-term strategy?
It raises some important questions. Are they planning to divest more of their underperforming wine and spirits brands? Or will they attempt to revitalize those brands through, marketing and innovation?
Right.
The impairment chart suggests a lack of optimism about the future prospects of those brands in their current state.
It's a pivotal moment for Constellation Brands. They need to make some tough decisions about the future of their wine and spirits portfolio. To our listeners, I recommend keeping a close eye on their next earnings report. Will they double down on their current strategy or make significant changes? The stakes are high, and their decisions could have a ripple effect across the beverage alcohol industry.
It's what makes following these earnings reports so compelling. We get a real-time glimpse into how companies are adapting to a constantly evolving world.
Absolutely.
It emphasizes the importance of staying informed and making, well-considered investment decisions.
Absolutely. And as always, we encourage our listeners to conduct their own research, consult with financial advisors if needed, and never invest more than they can afford to lose. This concludes our deep dive into Constellation Brands' recent 10Q filing. We hope you found our analysis insightful. Until next time, cheers to informed investing.